Good morning, participants, and welcome to Tax Administration Jamaica Special Taxpayer Assistant Program webinar. Our theme today is Be More Efficient. I am Dave Jeffrey, Deputy Commissioner General here at Tax Administration Jamaica, and it is indeed my pleasure to welcome everyone. We want to engage you. We want you to be compliant. We want you to be efficient in your tax filing. And so the aim of the webinar today is to provide you with this support. You, our sales agent, you, our commission workers. As the income tax filing season draws close, March 15th, as you will know, TAJ is providing this assistance so you will have a better understanding of your expectations and obligations. Over the years, we have forged a vital partnership with our micro, small, and medium taxpayers. This special taxpayer assistance program was designed just for you. This webinar is an enhancement to the program as we aim to modernize our approach and to foster more engaging relationship with you, our stakeholders. We know that you have many questions regarding the filing of your income tax returns. However, I am confident that our expert team of taxpayer education officers who will be leading the session today are fully capable of providing clear, adequate, and complete responses to your queries. We hope that you will find all of this webinar worthwhile and that it will be empowering to you to help you make your decision as you make your fair contribution towards national development. As is our tradition here at TAJ, we'll start the proceedings this morning with prayer. And so I now invite our team members, Shannon Taylor, to do prayers for us. Thank you.
Good morning, everyone. Today, Father, we just want to invite your holy presence in this session. We thank you, mighty God, that you are the good God. And Father, as we are about, oh Lord God, to do this presentation, we pray in the name of Jesus that you will direct everyone, the presenters, Lord God, or a moderator. Father God, sit in the midst, and our taxpayers, mighty God. Father, we ask that everything that is said here today, it will resonate with them in the name of Jesus. And that by the end of this session, they all will understand the purpose of this seminar. Once again, we give you thanks in Jesus' name.
I'm Geneva Allen, Taxpayer Education Officer at the St. Andrew Revenue Service Center, and your moderator for today. The authority continues to provide support through STAP, which is offered annually during January to March 15. This program is designed to assist you in meeting your filing obligations and is a vital aspect of the taxpayer support feature during this tax season. Today's webinar will provide general information that will be good for you in understanding your tax obligations, knowing what deductible expenses are, keeping proper books and records, and finally, Tax Administration's Jamaica expectation of you. We will also have a live tutorial. And in this tutorial, the S04 annual return form will be exhibited as to how you go about filing it online. Here are some rules that you have to stay with today. Please mute all microphones. And once your microphone is open, please limit the background noise and feedback. If you have any questions, please use the raise hand icon and wait until you are acknowledged to proceed with your question. Keep the questions short and precise as we have allotted time for questions and answer. You are welcome to pose your questions in the chat as we have excellent monitors who are able to answer your questions correctly. With that being said, let me introduce our presenters today. Miss Shawnette Taylor McNaught, a taxpayer education officer with over 16 years of experience in different capacities within the authority. She holds a bachelor's degree in finance management and is also a certified data entry technician. In April 2023, she was one of the awardees of Tax Administration Jamaica's top achievers for the period 2021 to 2022 and has consistently overperformed her annual appraisal reports. Ms. McNaughton is described by her colleague as someone who is always willing to learn and grow, a workaholic, a great team member, and most importantly, loving and sparkling. Her philosophy is, all things are achievable with God in the midst. Secondly, we have today Mr. Sherton Bellamy. He is an excellent taxpayer education officer and has served in the authority for over 18 years. He has worked in all the operational areas, audit. Sherton also holds the title of an expert user and trainer and has been a part of the implementation team of the Revenue Administration Information System, the authority's web-based operating software also. He has represented Tax Administration Jamaica at numerous seminars, tax and accounting discourses as presenter and panelist. In his role as facilitator in the Tax Audit and Revenue Administration TARA postgraduate degree program, he guided the cohort through the nuances of taxpayer account analysis and reconciliation. He is enthusiastic about continuous learning and is an avid reader. And so, with no further ado, I present to you our presenters.
Good morning to you, our valued taxpayers, and my TAJ colleagues. Hello and welcome to this morning presentation, Be More Tax Efficient. And without further ado, let's begin. Today's main objective is to assist sales agents and commission workers with filing their income tax return. But before you can file your income tax accurately and on time, you need to understand your tax obligation. Also, the deductions and expenses that are allowed. You also need to know the importance of proper books and record keeping and TAJ's expectation. One of the main obligations is to file on time and online. But what does it mean by filing your return? Filing means making a declaration of all your sources of income, expenses, and tax computation as per section of the Income Tax Act. However, you must understand that filing is important because if you don't file on time, there is a penalty that is attached for late filing and also for late payments. But why am I filing? When should I file? Where should I file? And most important, how should I file these returns? Now, why should I file? We know that you're sales agents and therefore you are on a contract of service, meaning that you have an employee-employer relationship. And we know that your employer is already deducting your statutories. So your NIS, your education tax, income tax, and others are being deducted. But you are not truly a self-employed person. By the virtue of you getting a commission and the nature of your employment, you are allowed to claim your expenses. And according to the Income Tax Act, Section 3, in conjunction with Section 5, these expenses are allowed to be claimed under Schedule 3, the Employee Expenses Claim section. Now, where are these taxes filed? Please note that all returns are mandatory to be filed online. How do I file these returns? You can visit our website, www.jamaicatax.gov.gm, And first, and this is very important, you have to create an e-service account. It is a first-time registration that is done so that you can have access to the SO4 and SO4A forms. And also, you can make your payments when you have an e-service account. Now, filing is, we are not just asking you to file return at Tax Administration Jamaica. It is by law that we are asking for persons with income to file their income tax return. Now, Section 67 of the Income Tax Act required every person liable to pay income tax for any year of assessment shall deliver or delivered by his agent a true and correct, and I say a true and correct declaration of income from every source of that year. Now, when do I file? You are filing the SO4 and the SO4A, and it should be filed on or before March 15. Now, as for your SO4, you might be wondering, what is the difference between the SO4 and the SO4A? But if you look at my screen, you will realize that the income tax declaration, the SO4, should be filed on or before March 15 of each year for the previous calendar year. And the estimated tax declaration, which is the SO4A, it should be filed on March 15 in the current year. Now, what if it's a case that you're employed for this year? So you just start working and you are a sales agent or a commission worker, and you were told to file your return. The very first return that you'll start with is the SO4A. Now, this is an estimated return. So based on the contract that you have with your employer, the amount of money that you will get for your income, you can use this money to put on your SO4A form. And of course, report this income under the employment section. Now, at the end of the year, so it's 2024, December 31st, it's a requirement for you now to do the SO4. And this SO4 will take precedence over the estimated return that you did. It is known as the final return. So this is the difference between the SO4 and the SO4A. Now, on the SO4A, which is the current return, the return that is done in the current year, you are allowed quarterly payments. But you might be wondering, why should I make payments if it is that my employer is already taking the taxes and sending them to Tax Administration Jamaica? Now, what if it's a case where we know nowadays that persons have several sources of income? So what if it's a case where you have you have income coming from rental? So you have rental income and you are also employed. So what will happen on the SO4A? You will report your income from rental, and you will also report the income from the self-employment. Now we know that the money from the self-employment is already paid over by your employer. But what about the money coming from self-employment? Now, what the system will do is to, when you declare the income, it will go ahead and calculate the different taxes that you ought to contribute, or the amount of monies that you ought to contribute. So what if it's a case where your rental income contributions is added or accumulated to 20,000? What will happen is that this will be divided by 4. And by March 15, there's an expectation for you to pay $5,000 first quarter. Then the second quarter being June 15, another $5,000. September 15, another $5,000. And your final payment would be December 15. At the end of the year, you would have already paid all your required contributions. Now, we spoke earlier about different sources of income, and we are aware that you are employed, but we spoke about you having other income. Now, tax is imposed on all sources of income. And just to name a few, you have the rental income, income from trade, business, profession, and vacation, partners in partnership, emoluments in cash, kind, and benefits. Now let's talk about the different income, because the taxes are imposed on your gross income and your statutory. But we want to ensure that you know the different income and what they mean. Know your gross income. This is the amounts earned before taxes or other deductions. So it's your pay that you get before anything is deducted from it. And your statutory income. Now, this is the income after all sources are allowable deductions are taken. And the allowable deductions include your NIS, your pension, and approved superannuation. Know your deductions. Now, please remember that the deductions must wholly and exclusively incurred in acquiring the income. And this is according to Section 13 and 15 of the Income Tax Act. Now, you have to ensure that there is no personal expenses, all expenses, and we will talk about that a little more. So all deductions must wholly and exclusively incurred in acquiring the income tax. And some of the deductions that are allowed for tax purposes, you have the transportation expenses. So we know that as commission workers and sales agents, sometimes you have to go beyond and above to identify prospective clients. And so you may have a client in Montego Bay that you have to travel to attain these clients. And so we are aware that you have transportation expenses because gas is very expensive. Hotel fees. So what if a case where you live in town and you have to travel all the way to Montego Bay and you're not able to come back to town and you have to book yourself into a hotel? We are aware of these expenses. The entertainment expenses. So you might want to take your client to Terra Nova. It's a little bit extreme, but just in case you have to entertain your clients, we are aware of that expense as well. Now, capital allowance, and this can be claimed on certain assets. In the case of the sales agent, you are allowed to claim your capital allowance on your motor vehicle if it is used and if it is acquired and used to earn your income. Now, let me repeat, you are allowed to claim the capital allowance if the vehicle is acquired and used for acquiring your income. Motor vehicle expenses, believe it or not, your fitness and registration and your insurance, the expenses you suffer for that can be claimed as well. And any other expenses incurred in the earning of your income. Now, let us look at some deductions that are not allowed for tax purposes. So expenses that are not allowed, and we talk about the expenses should be wholly affiliated to you acquiring your income. Now, your private and your domestic expenses, you are not allowed to claim. So you cannot drive to Montego Bay today to get a client and just stay there for the rest of the 4 days. And you're at Negril, Montego Bay, all over. And then you come and say, this is what I suffered. So I had to pay the gas for this, or I had to pay the gas for that. And also your light bill at home, if it is not affiliated to you earning your income, you cannot put your light bill. So any expenses that are not affiliated to the earning of your income, you are not allowed to claim. Now, as it relates to capital expenses, and capital expenses or expenses that are funds that are allowed to do upgrading and to also maintain buildings and properties. And this would go for persons who are also self-employed as well as employed. And for your depreciation, it is not allowed because for income tax purposes, we already have the capital allowance that is in place of the depreciation. Now let us look at the income tax threshold. And this is very important. You want to know how your taxes are being calculated. And one of the main things that you need to know is how the income tax threshold, or what the income tax threshold is, I should say. Now, since January 2018, our annual income tax rate is $1.5 million and $96. If it is that you're paid monthly, the threshold is $125,008. If you get your income weekly, the threshold is $28,848. And if you get your income fortnightly, it is $47,696. So this must be taken from your pay before the income tax rate, or before the income tax amount is calculated. Now let us look a little deeper and how we go ahead and calculate the income tax. If it is that you're earning from $0 to $1.5 and $96, you will not be paying any income tax. Now the income tax band of 0 to $1.5 million and $96, the rate is at 0%. If you are earning $1.5 million and $96, or 97 rather, to $6 million, your income tax will be calculated at 25%. And if you are earning over 6 million, so for instance, you're earning 6.4 million, that 0.4 will be calculated at 30%. So to make it a little more simpler, if you are earning 6,400,000, then that 400,000 will be calculated at 30%. And rest assured that in the next presentation, this will be broken down for you to have a better understanding. Now, it is very important for you to know the rates at which your taxes are calculated. Now, let us take a look at the NIS. For employee contribution, the NIS is at 3%, and your employer will also match it back at 3%. And bear in mind that this is from the gross emolument. Remember, we talked about the gross earlier, and we also talk about the statutory income. For your NHT, as an employee, you will pay 2%, and your employer will contribute 3% from your gross emolument. For your education tax, you as an employee will pay 2.25%, and your employer will pay 3.5%. And that is from the statutory income. And remember, we spoke about the statutory income that is after your NIS, the pension, and approved superannuation is taken. For the PAYE, and we spoke about that up to $5,096, the threshold, this is at 0%, sorry, and up to the 6 million, 25%, and after the 6 million, it's 30%. Now for the heart, the employee is nil. You'll pay nil as an employee. And for the employer's contribution, it is 3%. Now, if the employer payroll exceeds $173,328 per annum, then they are required to pay that 3%. Now let's look at the age range and limit for payment of taxes and statutory deduction. Now for the NIS, the age range is from 18 to 65. So where a person continues to be gainfully employed beyond the age of 65, that person is to contribute the NIS to up until retirement or the deemed retired age of 70 years, whichever one comes first. For the NHT, the age range is from 18 to 65. So persons who earn the minimum wage. Let me go again. So for the NHT, if it is that you are earning, if it is that you are between the age 18 and 65, you are required to make payments to your NHT if it is that you are earning above the minimum wage. So if you are earning below, and as of the 1st of June, 2023, the new minimum wage is $676,000. So if it is that you're earning your income and it is lesser than this, you are not required to make contribution to the NHT and also to the education tax. Now, the education tax is like 18 to 65, must at least be 18, and for persons who are employed. Self-employed persons who are earning above the minimum wage as well. So I did say to you earlier that if you are not earning above the minimum wage, then it is not a requirement for you to contribute to the NHT and the education tax. It is only the NIS that you'll be making this contribution to. For PAYE, do we have an age range? There is no age range for PAYE. So persons employed and earning above the threshold will be making payments for the PAYE. For income tax, there is none as well. So self-employed persons earning above the threshold are required to pay income tax. And for HEART, just for organization whose monthly gross salary payable is at least $14,444. Now let's talk about record keeping and the importance of good record keeping. Section 89, subsection 1 of the Income Tax Act requires that all proper books and records are to be kept in English to substantiate income and expenses to ascertaining gains and profits made and loss incurred in any year of assessments. Now, books and records are to be maintained for a minimum of 7 years in accordance to Section 17 of the Income Tax Act. As a salesperson, why do you think it's important for you to keep proper records? Let me go ahead and tell you. Records must be available to verify your claims made. So all claims that are made, you must be able to verify. So if you're doing your SO4 and you went ahead and declared that you have expenses from hotel expenses, you must be able to show your receipts. If it is that you're going to tell us that you drove all the way to Montego Bay from town, you must be able to provide these receipts. So one, it is very important for you to keep track of the expenses that are allowed to be deducted. No, for persons who are also self-employed and employed, you needed to prepare your financial statements and tax declaration. So I did say to you earlier that you have some persons who are employed, but also self-employed. And the beautiful thing is that the SO4 is used to facilitate income from all sources. So you don't have to worry about doing another return. If you're self-employed, and if it is that you're employed, the SO4 will facilitate all your income. Now, if it is that you want to do business with the bank, this record will help you to get favors with the banks and creditors. And of course, to support support or substantiate your claim just in case we need to do a tax audit. So if you do your SO4 and an auditor reach out to you as it relates to your claim, and you need to be audited, you have to have your support documents. And so this is very important. It is very important for you to practice good record keeping. Now, what are some of the things that TAJ expect from you? First of all, we expect you to be honest. You should be honest in your dealings with any department of tax administration Jamaica. We expect full compliance. So we expect you to complete your registration for all relevant tax type. We want you to file on time and online. Full disclosure of income of all sources. So when you're declaring your income, we don't want it is that you have a taxi on the road and you're just declaring the amount from employment. No. If you have any other source of income, we are expecting that you are going to be honest when you're reporting, and of course, full disclosure and income. Now we want cooperation. We are working together to serve you even better. And so we need to have our taxpayers cooperating with us. And very important, accuracy. And this is the reason we have these seminars, to ensure that our taxpayers are aware of their rights, their obligations, and how their returns should be filed. We spoke about the record keeping as an expectation. So you should keep sufficient records to enable your tax liability or expenses to be ascertained accurately. Keeping TAJ informed. You should keep us informed if you have a change of information, such as your address, your telephone number, and your email address. Now, another very important thing that you need to do as sales agent and commission workers, if you have a change of job, then this must be communicated to TAJ. The reason for this is that when you file your SO4 and your SO4A, you should every year be consistent. So there's an expectation for consistency. But we are not going to stay at the office and know that you are no longer required to file these returns. And so you must come to us and let us know that you are no longer a sales agent. And so you need these accounts to be deregistered. So it's very important for you to keep us informed, not just with your address, your telephone numbers, and your email address, but also if you have a change of job and it's not required for you to file your return anymore, please communicate this to us. Now, for the refund purposes, and this is very important, for one, you have to complete your SO4 form. So you did your SO4, you already gone ahead and claim these, declare the expenses, but we cannot give you a refund if you have not completed the SO4 form correctly and submit it. And also if your P24 is not attached. The P24 for relevant years is needed. It is on the P24, and please note that you're allotted to get your P24 from your employer. So at the end of the year, you can go to your employer and ask for the P24. The P24 information is what you need to use to declare on the SO4 form. And very important, the Schedule 3 must be completed. So you cannot complete the SO4 and forget the Schedule 3, which is the employee expenses claim, and then come to tell us that you did not get a refund. Remember, the Schedule 3 must be completed. Now, the Sales Agent Advisory issued January 2005, and these are some very important information. Agreed expenses are allowed for current year only. So the expenses, they are allowed for current year only. Agents must submit their return for expenses claim, and we spoke about that. You must be able to support these claims. So we need all your receipts. Whatever expenses you're claiming that you had suffered, we need the receipts to substantiate this claim. Now, ensure that your returns are properly filed. And we have the Taxpayer Education Unit. If you're not sure, you can always reach out to us. Failure to file the return will result in the denial for your agreed expenses. Join our online community. Now, it is very important for you, and I'll go back again and talk about the e-registration. So we are coming down, but it is very important for you to register for the online filing. If you want to experience convenience, go ahead, go to our website, www.jamaicatax.gov.jm, and join our online community. So with your e-registration, you can file and pay taxes online. You can apply and validate tax compliance certificates. You can submit and validate zero rating documents, apply for income tax exemption, request payments agreements, and of course, generate your statement. So in other words, it allows you to see what is happening with your account. So once you enter your username and your password, you're able to view your account. You can see all the balances. You can see everything that is happening on your account. And so we implore you to join our online community. Now, ladies and gentlemen, we have arrived to the end of our first presentation. Thank you for having me today, and I appreciate the opportunity to speak to you. And remember, at Tax Administration Jamaica, we are working together to serve you even better.
Thank you very much, Mrs. McNaughton, for your presentation. I know that it would bring into context a lot of the relevant things that we would need as sales agents in attempting to make our income tax declarations. Now, before I go much further, let me just restate. My name is Chertan Bellamy. I'm a taxpayer education officer working out of the Constant Spring Revenue Service Center. Now, my principal role this morning is to do a demonstration of how it is that you would use the online platform to complete your income tax submission for the year 2024. Now, before it is that we can even venture into that realm, it is very important that something that Mrs. McNaughton had mentioned, that we have to have an e-services account. Now, the process in order to register is pretty simple. You would go to our website, www.jamaicatax.gov.jm, and in the top right-hand corner, there is an option that you select that says login. Now, if this is your first time to the website, then you would not have a username and password. So there is an option to the bottom left that says create account. You would create the account. Now, standalone, that account will enable us to do some rudimentary things like pay traffic tickets, pay motor vehicle fitness fees, or property taxes. In order for you to be able to interact and complete tax-related submissions, you would have to apply for what is called e-service registration. Now, the requirement in order to be registered for e-services for an individual is that after you've completed the online application, you would have to submit a valid form of identification, government issued, driver's license, passport, or electoral ID. There are two ways that it can be done. It can be manually, so you can walk into any of our revenue service centers, whereby a taxpayer education officer will be able to assist you to complete the registration process. However, it can also be done online because we are working together to serve you even better. By simply selecting the apply for e-services registration option on the platform, you would then be able to apply for e-service registration by completing. All that we've done really is to automate the electronic application form, and then you'll be able to apply for e-service registration. The final step is to attach identification. The request processing time is generally about 3 to 5 business days, but we are working because it is income tax season to get these done within a shorter time frame. All right. Now, for commission workers as well as sales agent, there is one important submission that oftentimes when persons walk into our office for assistance, that is lacking. And that is the completion of the Schedule 3, which is the approval or the approved list of expenditures that you would normally have to complete in relation to your job functionality. All right, so at this time I'm going to share my screen and show you what the platform looks like, as well as what the Schedule 3 looks like. All right, so can I just get a confirmation that everybody is seeing my screen? Excellent. So what I'm going to do, I'm just going to go back through the steps of logging in into the income tax platform. So I was currently logged in, so I'm logging back out. Now, while it is that the system is logging me out, I'd want to point out that before we attempt to complete the submission for sales agents and commission workers, there are two documents that we need. So we need the P24, which is a document which represents the income and expenses that would have been incurred for, sorry, my apologies, your salary and the list of deductions that would have been taken from you over the course of the year. So that is what your P24. I'm reiterating, I made a mistake. Your P24 represents the income, total income that would have been earned, any superannuation, any contribution to approved pension scheme, your NIS contribution, NHT contribution, education tax, and income tax contribution. So this would normally be provided by your employer. The pre-context that we're taking into place here is that generally for some persons, especially those sales agents, you are engaged as a normal employee. The additional exemption that you receive is if you have to use your own motor car, or you have to expend your own cash out of pocket in order to complete your job functionalities. And this document that we are that is required is referred to as the Schedule 3. And it's not anything that you would not have record of. As Mrs. McNaughton had indicated, over the course of the year, while you would have been undertaking your duties, it would make sense that you would have kept records of every expense that you would have incurred. So it is just a matter of putting those expenditures together in order to arrive at your final figures at the end of the year. All right. So what I'm doing now, I'm simply just demonstrating the option to log into the platform. So let me go back from start. I try not to take anything for granted. So this is our website. It is www.jamaicatax.gov.jm. So to the top right, as I had indicated before, there's the option to log in. If this is your first time here, then you ought to be going to this option, create account. But if it is that you've been in this process before, then you automatically should have an online account. All right, so I'm going to enter my login details. And then select sign in. Once you've signed in, the e-service page will be displayed. Now, as I indicated before, there are some rudimentary functions that you can complete just by having an account. So to the top right of the page there, you're seeing traffic tickets. So in an unfortunate situation that you end up being ticketed, you can actually stay in the convenience of your home and pay a traffic ticket. Your motor vehicle fitness has expired. You can go onto the platform. If you are going to renew your driver's license, that can also be completed on the platform. Same, I'm just reiterating and making reference to some of the things that Mrs. McNaughton would have said from before. You can pay your property taxes, and there are some other licenses and some other fees that can be there. Another novel function of the platform is that any documentation that is prepared or presented using the online revenue administration information system, you can actually validate the documentation. So to the left of your screen where it says non-logon validation services, where it has that heading, you can, by virtue of having the TRN and the document number, you will be able to validate that the documents are in fact authentic. All right, but let's get into the meat of the matter. So when it is that you have logged into the platform and you're going to be completing your income tax submission, we would use this option, manage my e-services account. Once you've selected that option, it takes you to the e-services page where it displays who is logged in to the top left. It generally gives alerts wherever it might be that from time to time tax administration is attempting to reach out to you, then it would show that there are documents, emails that would have been sent out via the platform. Then there are a myriad of options that we can complete to the top right under the I want to option. But today we're focusing on being able to assist you to complete your income tax submission. So once you've gotten to this point on the page, there will be 4 accounts displayed: education tax, income tax, NIS, and NHT. So once you've selected income tax, the SO4 form will then be displayed. By selecting the year and the final option, the form itself will be displayed. Now, before we can continue, as I said, there are certain prerequisites. So we should have the P24 document, which we have gotten from our employer for the pay that would have earned, the income that would have earned over the course of the year, and the taxes and deductions that would have been taken. We also have to have our Schedule 3 completed with the list of approved expenses that we would have incurred over the course of the year. All right. So we're going to attempt now to populate the S04 form. All right. So I'm entering the NIS, which is particular to every Jamaican citizen is required to have a NIS. One second, please. All right, there we go. So the NIS number for an individual generally starts with a letter and then is followed by 6 numbers. Okay, so for those persons that have just become commission agents or sales agents, if this is your first year making a declaration, then the answer to the question here, is this your first time filing? That would be yes. However, if it is that you've been engaged in this process over a number of years, then we would select no. Indicate the period being filed for. Now, what this is asking for is the calendar year in which you're reporting the income. So because this was for last year, 2023, we're selecting the 1st of January, 2023 through to 31st December, 2023. Because the year, the basis of taxation is on the calendar year. However, I must point out, if it is that the period of time that you worked was not for the full length of the calendar year, then you can also indicate that. So in this case, I'm going to indicate that this particular individual started working in the industry, say around about April of 2023. In completing the dates, it is important that you select the date within the calendar to have it confirmed. All right. The next question is, are you a resident of Jamaica? Which is very important because, as Mrs. McNaughton had indicated before, if you do not indicate that you are a resident of Jamaica, then the individual income tax threshold will not be applied to your income tax declaration. All right, and the income tax declaration is that magical figure of $1,500,096. So if it is that you're in receipt of that amount or less, then there is no income tax that would be calculated for that particular year. But every dollar above that, up to $6 million, is taxable at 25%. And then if it is that you would have exceeded $6 million, every dollar above $6 million is taxable at 30%. The next question, and this generally causes a matter of concern for most clients, is the date the business was registered. Now, apart from the fact that it is that you are employed, really and truly, this is not applicable. You're not a business. Basically, the form is a general form because it is concerned with being able to assist all self-employed persons to file their income tax declaration. So with that in mind, you'll be deemed to be quasi self-employed because through this mechanism of filing the S04, you'll be able to get the benefit of those expenses that you would have incurred over the course of the year in completing your work. So you can ignore that particular field. There's the next question that asks, have you commenced trading? And again, you're not a business, you're not in the business of carrying out buying and selling, that kind of thing. So we'll select no for trade, for start of trade date. All right. The next question is, are you gainfully occupied in Jamaica? And we're going to select yes. The selection of this particular question will facilitate the informed computation of deductions. Are you gainfully employed? And we would select yes here as well. Now, under the circumstances, bearing in mind that we are catering particular to commission agents as well as sale agents, that is why I would be responding yes to both these questions. So this is not arbitrary for most self-employed persons, but in relation to the category of persons we are dealing with today, then they would select both options as being yes. All right. The next item that we are going to populate is who it is that prepared our financial accounts. Now, if it is that you are have some level of knowledge of accounting and you've prepared everything in relation to the submissions yourself, then we would check internally. But we know from time to time, some persons are not feeling so comfortable as being able to manipulate everything that they take on the responsibility of hiring an accountant. If it is that is your accountant that is making the submission, then you would select externally and you would put in the information in relation to the individual accountant or the firm that you would have hired to complete your income tax documentation and preparation. In this case, we're going to say internally and we're going to populate it with my personal information. So once we've populated the information, the preparer's name, the preparer's tiering, the preparer's address, and the contact number for that preparer, we simply select next. Now, the notation at the top of the screen, if gross receipts sales income exceeds 10 million, please check the box at line 1 to complete return and attach financial statements. So generally, this line is speaking directly to persons that would be totally self-employed. But in this case, we are dealing with persons that would have a combination, well, would be salaried persons, but they are attempting to be able to report those expenses that they would have earned in the particular income tax year. So we're going to uncheck this box and we're not going to be looking at the section that says income from trade, business, profession, and vocation. However, I must report, as Mrs. McNaughton had indicated before, that if it is that you are a sales agent, but you do also have additional business or income from any other source, then the income tax declaration S04 has the capability to accommodate all the significant ways at which you would earn an income. And if it is that you're indicating that your income doesn't fall in any of these categories, then we have line 47 that says other income. And you can simply just select this item and basically type in what is your type of income, who pays it to you, and the name of and the address of the payer. The form is attempting to be able to allow you to report income from every source. So, under the circumstances, if it is that you have no other source of income, as I was explaining before, then we would focus on the section that says income from all employments and offices. And we would start the population of the form at line 12. However, let me point out, if it is that you have income from the rental of property or equipment, then the form facilitates that as well. Because in the event that tax administration, through our many points of information, garners information that you did not report the accurate amount of income earned for the year, then the Commissioner General is so empowered under the Revenue Administration Act to assess you on those additional sources of income. But let us continue for the persons that would solely have an income from being sales agents or commission agents. So at line 12, it says salary, wages, bonus, fees, commission, and attach P24, which is the document which I would have indicated at the start that you would have needed in order to complete the submission. Salary, wages, bonus, fees, commission. So the form is comprised of several hyperlinks, which are the words in blue, and that is how we're going to be operating. So we'd select line 12, and then we would select add a record. Now, from the P24, we would begin to enter the information of the income that we would have earned over the course of the year. So in this case, I had earned $5,981,193.95. That's the basic pay for the year. The tax deducted at line B is asking for the income tax, and in this case, the income tax deducted is $1,09,695.08. All right. If there were any additional allowances that were given because of your employment situation, those would have to be reported as well. All right. If there were any benefits, those would have to be reported as well. And the P24 document would contain all that information. So you don't really have to worry as to what you'll be populating, because technically you would just be entering the information that your employer would have presented to you. Now, I must point out that the P24 is a document that should be given to you as a sales agent or a commission officer, because that facilitates you making this declaration. It is a requirement by law. Now, we would then move down to item 6, deductions in this employment. And over the course of the year, there would be NIS deductions, as well as we are also allowed as employed persons to contribute to a pension scheme up to 20% of your total emoluments. So the idea is that, let me just point it out, you can contribute more, but for tax purposes, we're only going to allow 20%. Let me just reiterate. The allowable amount that you can contribute to a superannuation or pension scheme in relation to contributions over the course of the year is 20% of your overall emoluments for that particular year. So once we've populated the P24, which is basically, as you're seeing here, an automated version of the document itself, we've populated our income in line 2A. We've put in the income tax that would have been deducted over the course of the year. We've moved down to, so we didn't have any allowance or benefits in kind. We go to number 6A and report the total NIS that would have been deducted in relation to the employees' deductions over the course of the year and the contribution to an approved pension scheme for that particular year. If it is that you have more than one P24, then we would simply just select this option, add a record, so that we could input the information in relation from another source. But if that's not the case, we would simply select OK, and we would have completed the population of the information from the P24. Now, the form in and of itself is going to ask you to re-enter the superannuation figure that you'd have entered into the document, 292,317.64. And this is a validation. All right. So the big component that we're now putting in, and the major reason why we're filing an income tax declaration, is now what we're going to look at, which would be the completed Schedule 3. In my experience, there are some officers, especially if they are new to this particular industry and kind of work, sometimes they don't know what it is exactly that they would have had to complete it on the Schedule 3. But as Mrs. McNaughton had indicated before, you ought to have been keeping record of those expenses that you had incurred over the course of the year. So this is what the Schedule 3 looked like for those persons that might be seeing it for the first time. Now, what is it asking us to do? It is asking us to populate the information in relation to the frequency at which we would have traveled to all the parishes in Jamaica in order to complete our work. So if that is not a situation where you're traveling all across the island, then you would have simply put in where it is that you would have gone. So I'm selecting St. Andrew, all the areas directly close to Kingston, and a one-off situation where I would have gone to Montego Bay. And I'm putting that I went there like on a monthly basis. So it gives us the ability to select where we would have traveled to in order to complete our work and how often we do it. So the options are annually, so that's once, daily, every day we have to do it, monthly, weekly. All right. Now, once it is that we've completed that, then we're now asking for the particulars in relation to the motor vehicle that you would have used in order to complete your task. So it's asking, is the vehicle that was used for business owned by you or assigned to you? And in this case, we are putting owned. Now, that's going to trigger and ask us, what was the date of the purchase of the car? And this is important because you are able to claim expenditures in relation to the time frame that we've had the motor car. So that's why it's asking that question in particular. So I'm going to put that I purchased this car in January of 2023. So it's a brand new car, pretty much so that I can take on the arduous task of challenging the street. And I'm saying that I bought a Toyota Corolla. All right, the CC rating in this case is 1900. So it is important at this point in time that you'd also have your motor vehicle documents so that you can input the information if you don't know all of this from your head. Now, at line 3, it is asking us to approximate total mileage usage of the motor vehicle during the year. So what this question is asking or directing us to do is to put in the distance that we would have traveled in totality, whether for business or for personal purposes. Because what we're going to do is to apportion, because the challenge really is that oftentimes we're not able to track specifically how much we would use for personal as opposed to business purposes. So what we're looking at is the overall usage and then being able to find a percentage of personal to business use. So in this case, I'm going to indicate that I used my motor car for the year for around about 600,000 kilometers. All right. And the approximate total mileage attributable to private use, because I only use it to go to the supermarket and to go to church on Sunday. So I would say that out of that 600, only 200,000 would be used for private purpose. So the significant part of that 600,000 would be in relation to my work. Number 5 asks, is this vehicle still in use? Yes, it's fairly new. It's still in use. All right. If it is that you indicated that the vehicle is, you change your vehicle over the course of a year, you would indicate no, and then say how you dispose of the vehicle and report to us how much it is that you realize, if you did realize any gain on the disposal of the motor car. All right. So those are just some general information, particulars of the car, where we traveled, the total kilometers that would have traveled over the course of the year. Now we're going down into the nitty-gritties. How much petrol did we use in order to travel for this particular course of the year? So we say that we use for most of the time, the petrol prices generally move between 190 to 220. So we're going to say that we bought gas at average of 210 per liter for the year. And we round about 6,000 liters we use. All right. Then over the course of the year, in order to keep our car in tip-top shape, excuse me, we would have to service the car. We'd have to purchase oil. We'd have to change the tires. So I'm going to say that we spent $450,000 in relation to repairs and servicing the car. And these are all records that you'd have to keep. Motor vehicle insurance, I've been in this business for some time. So my motor vehicle insurance has come down. It's not as high. It's around about $120,000. The motor vehicle fitness and registration for the year, to register the vehicle for the year, is $12,600, and the fitness fee is $4,500. So that's $17,100. All right. So the total motor vehicle expenses for the year is carrying me in the region of $1,847,100. And the portion, based on the apportionment at the top, 200,000 to 600, is indicating that I'd have used. So of that 1,847,000, 615,000 of it was in relation to my private purpose. So the net motor vehicle expenses in relation to my business, carrying out my sales and commission, is $1,231,400. Now, even though I'm just populating this, this has to be supported by records. So if it is that you weren't doing it, we will facilitate you and be reasonable where it is that expenses can be deemed to be reasonable. But going forward, we should ensure that every time we go and purchase gas, we ask for a bill. When the mechanic works on our car, we ask him to write a receipt for us. All right. So over the course of the year, I also remember I went to Montego Bay, and because of the nature of the work there, I had to spend 2 nights. And the rate generally is around about 100 US, which is anywhere between $15,000 to $15,500 per night. All right. So you're seeing the context that we're allowing, tax administration is allowing you to be able to get the benefit of all those expenses. There's a term we use, out of pocket. So your employer did not reimburse you for doing all of this work. So tax administration is giving you the ability to recoup those amounts that you would have spent in relation to taking out, in undertaking your business activity. Now, other expenses. So at the end of the year, generally, we want to fit our clients. So we'd provide them with novelties, calendars, that kind of thing. So we'd go into our pockets again and spend some money there. So let's say I spent about $150,000 in relation to those expenditures. Now, the form also facilitates for reimbursed amounts. And if at any point in time your employer reimburses you, it would have to be populated, because tax administration, through our many information avenues, can garner this information. And we will not finalize the completion of your declaration for any refunds unless it is that we'll be able to procure all information in relation to the expenses, whether it is that you were out of pocket or you were reimbursed by your employer. So pretty much we would have completed all the aspects in relation to those expenses incurred in carrying out our job, and the total, the net amount that we're attempting to claim here is $1,412,400. All right. And this is completed now in our expense schedule. And you see the figure being reflected there. So pretty much we'd have completed only this section of the form, income from all employments, and offices. But again, I must reiterate, if it is that you have income from any other source, the form facilitates the population of those additional sources. All right. So the next page that we will go to is those allowable deductions. Now, there is an allowable deduction that we can actually capture in this case, and that is capital allowances. Now, the basis by which we will do that is to value the car, and over the useful life of that car, generally under tax legislation, is 5 years. So we'd be able to write down the value of the motor car over the 5 years that we'd use it. So say, for example, that I had purchased this particular car for $2 million over 5 years based on the agreed rate, which let me just pull up that agreed rate for you and show you on the platform here. Under publications, we would go to capital allowance. Capital allowance for a motor vehicle, is actually 8 years, and the rate is 12.5%. So what that means is that I'll be able to claim 12.5% of this $2 million each year. But the computation is a little bit more intricate, and let me show you why. So it's $2 million times 0.125, which is 12.5%. So I'll be able to claim $250,000 each year. However, remember now that this car is used both for personal purposes and as well as for work. So I would not be able to claim the entire $250,000, but in relation to the estimation that I would have made in relation to my income on the Schedule 3, I could use that as a basis to determine how much of this $250,000 I could use. So based on the total kilometers there, 200,000 over 600,000, that would come to 1/3. So I'll be able to claim 1/3 of the amount of this $250,000 as capital allowance in relation to my business. So divided by 3, so I'll be able to claim $83,333.33 as capital allowance in relation to this particular year of assessment for the motor car that I would have purchased. And then now we would have to be able to over time keep record of the amount of capital allowance that we are claiming, and it is going to ask us, the form is going to ask us to attach the schedule which can be downloaded from the online platform, that shows the entire breakout, the cost of the vehicle, how much allowance we are claiming in the year, what is the ratio of the allowance, and the written down value as at the end of the year. All expenditures that you're going to claim have to be fully documented for. So we then go next, and it shows us now the computation of income tax, or it's asking us to provide it with all the details of those deductions that would have come out at source or from any other source in relation to the income that we would have declared. So the payee deducted by our employer is pre-populated because we would have completed it in the P24 declaration that we would have completed when we're filling in the data from the P24. Okay, so the last item here, education tax deducted or paid by our employer, which would be displayed on the P24, and we're populating that as well. So these figures would have been given to us on the P24. Is not anything that we're going to calculate, is not anything arduous. We're just extracting the information from the P24 that would have been given by our employer. And then we go next. On this page, these questions under Schedule A and Schedule B are basically required in order to give us the required rate of which the contributions which would be truly deemed to be computed. Now, the context again is that the form is a general form that accommodates all persons that will be self-employed. So as a result of that, under the circumstances, we are employees, but we are simply using the form to be able to claim our expenses. So these questions have to be completed to guide what rate will be applied in the assessment of NHT and NIS. So the first question asks, are you a domestic worker? And in this context, we are domestic workers. The next question asks, are you a Jamaican citizen employed by an embassy? And we are not employed by an embassy. And then the last question asks, do you have any income from self-employment? And we don't. The only source of income we have is our commission work or sales work. But then we have to populate the amount of NHT that would have been deducted by our employer at source. And again, this information will be provided on the P24. All right. We now move to Schedule B, which is concerned with NIS. And the first question asks, were you employed during the course of the year? And we're going to select yes. But don't move yet. The line item then becomes brightened with an indentation to the top left that says red, because we're now going to have to select the line and say how it is that we're paid on a monthly basis. And based on the requirement of how you're paid, it will then indicate how many entries you should create. And the purpose of these entries is to record how much NIS would have been taken for us from our salary in each of the months. So for the 12-month period, the system is asking us to report for each of the months the NIS that would have been deducted from our salary. And the reason for that is because the NIS legislation asks or makes a requirement that every individual should be making a contribution for 52 weeks. So NIS pretty much has this indentation where it is asking for us to identify for each month how much it is that we would have paid, because it's time bounded. One of the things I want to point out to you is if you didn't work the entire year, then if you look on your P24 and you see that it is the average total amount, it is $150,000. It is then that is saying that you would have worked for the entire year. So if it is that you did not work for the entire year, you cannot pay the maximum NIS contribution for that year, because it is required that it is taken out each month. So if it is that you only worked for 8 months, it would be the maximum contribution 12,500 times 8, or based on the number of months. So if it is that you did not work for the entirety of that particular calendar year, then you cannot pay the maximum NIS contribution. So the total income for the year, $5,981,193.95. The rate is 3%. And the total contribution is $150,000. No, let me step back. Let's do this correctly. So the rate, let's populate each of the fields. So what you would have to do is to divide your annual income by 12. And that gives me $498,432.83. So that's what I would have earned per month. So we're going to populate each of the rows. The rate is 3%, and the maximum NIS contribution per month, regardless of how much you earn, is 12,500. So I'm just going to replicate that for the 12 periods. So take your time, because you want to ensure that the right amounts are populated in relation to deductions per month. Almost there. Or for those of us that are pretty much savvy with navigation and copy and pasting, we could just copy and paste in all of the information. All right, so as I said, the total rate for the year, 3% and 12,500 per month. That's the maximum. So regardless of how much you earn, you can only pay up to the ceiling amount of 12,500 for NIS. So I know if anybody took out their calculator and was looking at this 498 and calculated 3%, you'd be actually getting a little bit more than $12,500, but this is what the NIS legislation says that the amount should be. That is the maximum amount for the month. So in totality, for the year, you should not be seeing a figure representing more than $150,000 in respect to NIS for the year. All right, and once we've completed the table, we select OK. All right, the questions come again. Are you a Jamaican citizen employed by an embassy? No, I'm not. Were you employed as a domestic worker? No. Do you have any income from self-employment? No, I didn't. Now, Section C facilitates for those prepayments of NIS that would have been done over the course of the year. Now, NIS paid from stamp card, and this one generally is attributed to those persons under the designation of domestic worker. We facilitate them by them being able to go to the post office and pay for stamps and populate a book that is issued by the National Insurance Scheme, which accounts for their monthly or weekly deductions. But in this case, we are salaried, and as a result, our employer would pay over these amounts. So we would be going to line 9 that says NIS deducted and payable by employer, and you notice it says both the employee and employer's contribution. So even though you'd be seeing $150,000 on your P24, you would actually be getting both the benefit of what you paid as well as what your employer paid. So the total amount that you'll be putting here is $300,000. And the basis of that is NIS legislation that says that you get both the benefit for tax purposes of what you paid as well as what your employer contributed. Now, this last question asks, during the year of assessment, did you conduct any transaction with an affiliated company or connected person? This question is important for those self-employed individuals who might be trading with other businesses or facilities that belong to them. Under the circumstances, it doesn't apply to us, so we're going to select no. Now, at this point in time, we have gotten to the place on the form where we can now attach our P24 as well as our Schedule 3 if it is that we are doing it externally. But in my case, I would be making the submission of the documents at Tax Administration Jamaica. So I'm going to say that I'm going to choose to submit my files at a later date because it is that I am going to be submitting the document to the officer that is assisting me. However, if it is that I were going to be attaching the documentation, I would simply select supporting documents, select add to the bottom right, and then search for where the document is located and attach it. All right, but that's not the case in this instance, but we want to demonstrate both sides so that you'll be able to complete your submission either way. Okay, I choose to submit my files at a later date, and I'm going to select next. Now, once I've selected next, what the form is going to do for me is to show what I have comprehensively entered. So if I start at line 12, it shows me my salary, wages, bonus, fees, commission, the salary that I'd have earned. It shows the expenses that I have claimed using the Schedule 3. It shows the NIS that would have been deducted by my employer, as well as the contribution to the superannuation scheme. So even though I earned $5,981,193.95, I'm effectively going to be taxed on $4,126,476.31. All right. Then it is going to also make an allowance for the total capital allowance in relation to the motor car. Now, remember now the basis of computation. Even though the capital allowance rate is 12.5%, and I'm able to claim that over 8 years on a car value of $2 million, I'm not exclusively using this car for business purposes. So as a result, I was only able to claim a third of the actual allowance amount for the particular year. And that reduces as well the statutory income, or the income that I'm going to be, my taxes are going to be calculated on. So the form in section F shows you what your statutory income is. Excuse me. It shows you the portion of income that will not be taxed on, which is the $1,500,096, which goes by 3 names: the income tax threshold, net tax-free pay. So this portion protects you against income tax, $1,500,096. So then I'd be taxed on the differential, which is $2,543,046. $2,543,046.98. And on that, the income tax that is assessed is $635,761.75. But if you would have recalled from before, my employer actually took $1,009,695 in relation to income tax. So I will be due an income tax refund of $373,933.33. And the basis of this is because of the expenses that I would have inputted into the form, because my employer would not have known that these are the costs and the expenses that I would have incurred. And this is the mechanism by which you'll be able to benefit from those expenditures that you would have incurred over the course of the year. Similarly, in relation to education tax, there'd also be refunds to be had there, because taxes are calculated on statutory income, and statutory income gives provision for on the allowance for NIS plus approved contribution to an approved scheme, and in this case, the expenditures that you would have incurred. So you'd be in this case, I would be experiencing refunds in relation to education and income tax for the year of assessment 2023, because my expenditures. Now, before we continue though, I want to point out and reiterate that these amounts have to be validated. And so after I've entered them on Schedule 3, the auditor might ask me to present documentation that shows how much I used over the course of the year. Otherwise, we will have to use other possible criteria to establish the basis, and the basis for tax purpose is whatever is reasonable. Now, looking at section I of the form, it is simply showing, this section of the form shows the assessed tax, any estimated tax or contribution that would pay, and the balance. So far, I'm going to be getting back income tax refund and education tax refund, but I would have maximized the amount of NIS and NHT that I should have paid. So there are no further contributions required on that basis. And the schedules are pre-populated with the information based on the questions that you would have asked that assess the actual level of NIS as well as NHT that you should have paid. So once you've reviewed the form and you're satisfied that the figures come back, or you want to make a call to somebody at tax administration to confirm of what the submissions are, if you're unsure, then at that point you simply select the submit option. And with that, you would have completed your income tax declaration that highlights those expenditures incurred as a sales or commission agent. All right. So that's the full context of the SO4 form. We are going to now pass back to the moderator, but we'll still be online. There are persons in the chat. There are persons online that are answering your queries. So we are going to now we're now going to pass back to the moderator, Miss Geneva Allen, and then we will facilitate some questions. Thank you.
Be free to put your questions into the chat, and all of us are going to be chipping in to answer all your questions and queries.
Nice presentations, both presentations. Really learned a lot. But my question is, both presenters mention records, maintaining records. Does records only speak to receipts, as in a physical receipt? I know there's a section in the income tax regulation thing that specify keeping records, but is it necessary just receipts or records? Because why I asked this question, I filed my income tax, right? And what I normally use along with, I only kept 2 receipts for the year 2022, but I normally use 1 credit card to buy gas. And so I'm saying that if they need records at tax office, I can print this statement. It shows the gas station, it shows the amount of gas, money I spent on gas and all of that.
That's an excellent. That's an excellent mechanism. That's an excellent mechanism, Andrew. So that is in fact a basis of record keeping. If it is that you use that credit card exclusively, then that will support all the claims that you would have submitted on your declaration. That is in fact okay.
But the thing about it, I did that, and when I was being audited, I told the auditors I have all those records. I even went through and make an Excel file for each of the gas stations, totaling the amounts, and they said that they can't accept that. They need receipts, as in physical receipts. So that's what I want to know, if records refer to just receipts or records refer to any source documents that you can get your information when doing your income tax. Because nowadays, look at it, we are going green, right? And I'm not sure how long those regulations were made. Maybe those time online was there and all of that, those online records and stuff. So is it that we're sticking to just the receipts, or can we, for example, the same example that I just gave to you, is that an acceptable source? Well, I was told it was not when I filed my 2021 and 2022 returns.
2020. Well, Andrew, under the circumstances, I'm not so sure as to why it wasn't allowed. But probably on a one-to-one basis, we'd have to discuss that. But generally speaking, your credit card statement is a good enough basis for us to authenticate whether or not the expenses incurred are real. So we might have to look into your particular situation. But generally, we do accept that in the event that you cannot produce the individual receipts, the credit card statement is a good basis by which to substantiate that the expenses were incurred.
Okay, that's my final point. I know others may want to ask question as well. When I was audited, when I was presented with the audit report, I see motor vehicle expense with a figure, because I was not able to produce the gas receipts because I wasn't saving those, because I was depending on the credit card statement to be substantial for those records.
Yes.
Yeah. When I get the audit report, I'm seeing that it says petrol for operations 0. So they disallowed. Yes, they disallowed all petrol. So I'm asking, if there's no petrol, the car can't move. So I don't think I need those motor vehicle expenses that the figures for. But I heard you mention that there you would normally have a discretionary amount for expenses in the sense
whatever is reasonable.
Whatever is reasonable. So that's what I was thinking as well. So if you discredit the credit card statement, wouldn't there be a discretionary amount, a reasonable amount that you would allow to say this is the amount that I think you may spend based on the line of your business?
All right, Andrew. This seems like a situation that we might have to look into, because generally, and while it is that I say generally, you know that for every rule there are exceptions and exemptions.
Yeah, man, I
So we
understand.
would probably have to look into the breakout of what transpired in your particular situation, because that's not generally the approach of tax administration.
Okay.
All right.
Thank you very much.
You're welcome. All right. Odette McCoy, you can go ahead.
Yes, good day.
Good day.
Good morning it is. Thank you
Good
guys.
morning.
I have one question. I've asked in the group, but I'm still not clear. It's
Okay.
in computing the statutory income
Mm-hmm.
for persons earning over 6 million, right? Because if you have 2 million,
Mm-hmm.
from that you would take your threshold, your NIS, and if you have an old age or any other allowable, you'll take that and then you calculate at 25%. Fast forward now to an increase. So I've now moved from 2 million to 7 million.
Mm-hmm.
The upper band of that 1 million, when you calculate the you take your threshold from the first 6 million, but when you take your NIS,
Odette.
yes.
You stumbled on ground that is not firm.
Go ahead.
So
Correct me where I am.
So $7 million is your total income, thereabout, right?
Yes,
Let's
right.
use 7
Yes,
million flat.
correct. Yes.
$7 million flat. All right. So let me show. Let me share my screen so that you're seeing on the form, and
Okay.
I'm going to adjust the figure so that you see that as well. So I'm showing you from the perspective of the form. So what I'm going to do, you see in the screen already?
Yes, I am.
All right, so I'm going to adjust my income to a figure that would put me in the region of above 6 million, right? So right now I'm at
6 million.
over 6 million. So I'm at 5.9 now, right?
Right.
So I'm going to put it at 7.2. Or no, let's put it at 8 million, 8.5 million. Just so that way there is a sufficient coverage.
Okay.
All right. So now it takes, I'm going to now navigate. So at 8.5, the expenses are allowed of 1.4, NIS of 150, and my superannuation at 292. So my earnings now is at 6.6 million. You're with me so far?
Yes, I am.
All right. So let's now go to the income tax computation at section F. So while I earn 8.5, statutory income is really gross minus NIS and any contribution to an approved pension scheme that is statutory. But I'm also given leeway in relation to the capital allowance I claim, as well as the agreed expenses. So I'm now, my income that is subject to tax is $6,561,949.03. So on the first 1.5, no tax.
Okay.
And then up to 6 million, I'm taxed at 25%. And then the 561 that is above 6 million is taxable at 30%.
Okay. So if I had old age pension, then at which point I would add that too and take it at the beginning?
It would have come out at the top there and reduce. So the old age exemption, sorry, let me not say old age. The age exemption is 80,000.
Yes.
So that would take me down. So if I include it and I can actually populate it here, well, let me change. If I change the NIS, because the NIS number guides that, if I were able to put in an additional, take off an additional 80,000, I'd come down to 6,481,000. So I would
become taxable.
Exactly. So only 6,480,000. So let me actually show you on the form. I'm going to go back to the first step of where my NIS would be inputted, and I'm going to change it to a NIS that would put me in the category to get the benefit of age relief. and there it would change, it would automatically pre-populate. So I'm going to put this at, all right, okay, about 46. That would be a good, yeah, 46. Because the NIS actually facilitates that. So it's very important that you put in the correct NIS, because the form actually automates that so that it pre-populates the
age pension if you're at the age,
the age exemption. And if
yes.
you populated the pension field as well, it would automatically populate that as well. Or then put in the pension exempt, the age exemption. So let me try and type it in here. Oh, it's not taking it because the way in which I would have prepared this form to show the demonstration, it would have used my information.
Okay.
So really and truly though, it would take out an additional 80,000, which would take us down to 6,481,949.03. And then the income tax computation is done.
There. Okay.
So an easy way that I normally indicate audit to get it done is once you find a figure and the figure is above $6 million, you automatically just take off that figure off the top and say, this is what I'm paying 30% on.
30% on. Okay.
And then you work backwards in relation to the 6 million.
To the difference. Okay.
Yes. That's an easy way that I normally refer.
Okay. Thank you.
You're welcome. All right, so I'm looking in the queue and I'm seeing Delroy and Andrew again, but I think they would have asked their questions already. Anybody else with a question? Hamilton. Go ahead, Hamilton. I'm asking those persons that would have asked their question already to lower your hands. There's a Mr. Hamilton that has a question. All right, I'm going to move ahead. Petronia Hines. Oh, so once again, valued clients, I'm asking that if you've asked your question already, that you lower your hand. And if it is that your question has not been answered in the Q&A, I'm asking that you could raise your hand and you communicate that question over the live platform so that others can benefit as well. I am being told Sherry Lee. Sherry Lee, go ahead with your question. Sherry Lee, are you on? Are you hearing me? All right, I don't hear Shirley, so I'm moving on to Melvin Smith. Mr. Smith, you can go ahead with your question.
Yes, sir. Are you hearing me?
Yes, I'm hearing you loud and clear. Go ahead, sir.
Okay, my special case is that as of 2023, I started collecting pension.
Yes.
I'm self-employed.
Yes.
Now, that first pension statement indicate that a lump sum portion was available free of taxes.
Okay.
And then the non-lump sum portion, it was paid it was a payment that was accumulative of a couple of years because of some documents I wasn't able to find initially.
Yes.
So that it was accumulated and one part was taxed at 25%. And the other part was considered a lump sum tax-free portion.
Yes.
Now, how do I incorporate that in my filing? Because I tried to do it earlier this week and I found that the purported tax-free lump sum portion was being taxed.
Okay. All right. So generally the basis by which the accountant general would denote a particular payment as non-taxable is generally when they refer to it as an alimentary payment. So that simply means that it is an aggregation of several years.
Yes.
So generally what they would do is provide you with a statement that gives you the breakout per year as to the lump sum so that you could report that amount per year. Because essentially when it is reported that way, you would get the benefit of the income tax threshold for each of those years. And that is why it would become non-taxable. So it should have been paid. So let's use an example. So it should have been paid 20, 21, 22, 23, and so on and so forth.
Yes.
But it was supposed to be paid, but you actually got the payment in 2023. So really those payments were for those particular years and should be reported in those particular years.
Yes.
And that is the basis by which it is not taxable. So essentially, if you were reporting, you would break out the total payment over the span of the years that it covered. And in that regard, it would not be taxable. But if you were to report it in 1 year, the amount might be so significant that it causes the firm to be calculating income tax because it is in its lump sum state.
Yeah. All right. Like the former female caller earlier,
Yes.
who talked about beyond the 6 million threshold, right?
Yes.
I am a self-employed person beyond that threshold. Okay.
Yes.
So that effectively when I insert the pension payments for 2023,
yes,
was calculated at the 30%. So now so one part of it was paid taxable and with a 25% deduction taken. Okay.
Yes.
So I was able to put that in the form and I put that deduction.
Yes.
Right. But then the other piece, which is supposed to be the lump sum piece. In fact, the narration here says one-time tax-free lump sum, including interest. Okay.
Yes.
You know, the question is for me, how would I? And you said, you know, I should get a statement, but the statement is a cumulative statement. So do I have to get them? Do I have to get them to break it all out and how?
Yes. So I think I don't know the channels, but I think you can reach out to the Accountant General Department and they'll be more than willing to produce that for you. What I'm going to attempt to do is to use the form that you're seeing on the screen here. I'm going to delete some of the information that I have populated already.
Yes.
And attempt to populate it with a situation that describes your particular instance so that you would see the basis of the calculation. All right. So
Thanks.
Let me go back and try to do it because I recognize that oftentimes it's one thing to say, but then when it is in actual when you actually produce it, it shows you something else.
Yes. All right? I understood. And what I did, I tried to be creative myself. So I used the field for dividends and all these other kind of things to put in that lump sum piece and then put the taxable piece somewhere else to navigate.
The dividend is not a good field because it's a final tax. Generally, it is where you would have indicated that you've received a source of income or you have documentation to show that you ought not to be taxed on a particular source of income. It is ideal that you put it in the section that says exempt income on the second page where it asks for age exemption and pension relief. That portion of income that should not be taxed generally should be populated there. Because if you put it anywhere else, then the form is automatically geared. Because what the form is doing, you know, is attempting to apply every piece of tax legislation in relation to income tax based on the income that you would have indicated.
Okay, so let me tell you exactly where I put it, because I have a printout of that in front of me. So I put the taxable piece in pensions.
That is correct.
Yes, and then the piece that is purportedly non-taxable, I put it in other distributions, excluding dividends and interest.
No, that's not the best place to put it.
Okay.
So all right, let's put the particular income at, say, around about $10 million.
Yeah, okay, yeah.
All right. I'm going to put in some expenses that would take it down to, say, about 8, right?
Yeah, fair.
So say rent is $2 million, because a service I offer, but I just rent a facility to store some things, and that's $2 million. So net profit from my trade or profession is $8 million. But then I have this pension that you're speaking to.
Yes.
And say the pension is $800,000.
Yes.
All right. But because of how it was paid, they paid the alimentary portion in collaboration to the pension. So say they paid 500,000. So let's put the total pension 1.3. What was paid for the period? 1.3 million.
Yeah. Okay.
But then I get to the next page where it is pension exemption and age exemption. I'm going to put the 500,000 in other exemptions.
Okay. Got you.
500,000 there.
Yeah.
No. And then I complete the rest of the form.
Okay.
Now, if it is that you would have put the figure there, then tax administration is going to ask you what is the basis by which you're saying that this amount should be exempt. And then you would use the documentation provided by the Accountant General Department to substantiate that portion. So more than likely, you'd have to have a soft copy of the document that Accountant General would have issued to you.
Yes.
And attach it at this last line item of the form. So based on what we've done now, you're seeing what I've done here, $10 million in sales, $2 million expense, so that brings it down to $8 million. I have pension of 1.3. So in total, the income is 9,300,000. I've gotten pension exemption.
Yes.
Which is 80,000. And the 500,000 of that 1.3, I've put in other exemptions.
Yes.
So it now reduces the overall income to 8,720,000, which effectively remove the 500,000 payment from the basis of now being taxed. Garwin Price. Go ahead, Mr. Price.
Okay, wonderful. Thank you. Thank you very much.
You're welcome.
So my questions aren't exactly related to the presentation, but hopefully you can facilitate me. It shouldn't be too far off.
I'll try my best.
Thank you. I noticed that this presentation is really geared towards, as you said, those who are employed, but
their commission or sales agent, quasi self-employed.
Okay. How different would this process be if you were completely self-employed, in the sense that there is no employer for you, at least in Jamaica, at least, let's put it that way.
Okay. So the first part of the form, and I'm glad I left it up. Income from trade, business, profession, and vocation. You would simply select the hyperlink at number 1, gross receipt sales income. And at the top, put in the income that you'd have earned from your trading activities. And if it is a service, there would be any cost of sales. But if it is that you're actually moving tangible goods, then there would be cost of sales. But if it is a service related kind of activity, it would be populating the line trading activity or rental activity if it is that you're renting equipment. And then you would simply just populate the corresponding business and administrative expenses associated with you generating that income. And once you'd have populated that portion of the form, accepting that you have capital allowances or any deductions made at source in relation to any income, additional income outside of your training activity, that would be the population of the form. and then you take the requisite steps to get to the end of the form, answer the questions, and it would show you the computation for tax purposes.
Okay, cool. But then for things like NIS, there's no employee section. So I guess that is only, I would only be considering the employee portion of that part.
That's an excellent question. Now, the form is so calibrated for persons that are deemed to be self-employed, and your income is from trading activity, that you are required to do a corresponding declaration referred to as the S04A. And this is an estimated assessment of your income, generally based on a previous year's assessment. And what it allows you to do is to make a declaration of what you think your income will be based on what you did in a previous year. And then it gives you the basis then to make payments on a quarterly basis, March 15th, June 15th, September 15th, and December 15th. And then the form is so calibrated that it would pull in those amounts that you'd have paid, especially in relation to NIS, because NIS forms the basis of computing your statutory income for tax purposes. So it would pull that figure into the form, and I'm going to show you where exactly it would. In section D here, you're seeing on the screen, number 4, NIS paid on income from self-employment. So it would populate it there to facilitate your income tax computation. And then when we get to section I, summary of taxes and contributions payable, if you've made any payment in relation to any of the taxes and contributions as governed by the S04 form, it would populate it in the column that says estimated tax contribution paid. So then you would only be out of pocket in relation to any balances that you would have after the taxes assessed. So the form is at that level where it accounts for everything that you would have prepaid as a self-employed individual.
Okay. But okay, fair enough. And I wonder if I can take advantage of the kindness, and you can tell me if I'm going too far. This is related to the SO4, but for the I'm also looking at fulfilling a IT02. I know this is not directly related, but I only have one question related to that. There's a section there called private members. Principal members, yes. The benefits. What is that? If you are a small company that there's literally no employee, what would that be related? So generally, the principal members, for being engaged in the organization, they can either be compensated through executive director's fees or salary, or generally any benefit in kind or cash. So essentially what it is, that section of the form is asking you to declare is whether or not during the course of the year, any funds were taken and given to these principal members, primarily directors of the organization. It's just to show how much you benefited from the organization by being a director. Okay. So if there is nothing, then you don't have to report anything. But if you took a salary out of the business, then that's where you report it as the director. Okay, wonderful. All right, thank you very much. Much appreciated. You're welcome, Mr. Price. All right. All right, Norris Brown. Go ahead, Mr. Brown. Mr. Brown?
Oh, unmuted. Sorry about that.
That's
you hear me now?
Yes, sir, I'm hearing you.
All right. I've been employed as a sales agent for the last 4 years. However, this is my first time filing for my taxes. Would I need the SO4 or the SO4A form?
You're doing both. Okay. So you're doing a SO4. The SO4 is the declaration for 2023. The S04A is an estimated declaration. So if it is in your case, seeing that your deductions are taken out at your employment,
Yes.
You could so populate S04A so that it doesn't assess you for any taxes and contribution based on the income that you'd declare. On the form itself, the first section of the form asks you to declare income, and then on the next page, it asks what source is your income. And if you put employment income, what it will do, it will nil out. It will set off against the income that you declared on the first page, and then so that you wouldn't be required to be making any estimated payments per se.
Okay, understood. Because I wasn't clear about that part. Another question, as it relates to the motor vehicle. What's that section called again? Section 3?
Schedule 3.
Schedule 3. Sorry about that.
Schedule 3.
All right. In the first 2 years, the vehicle I used was not in my name. Could I still make a claim?
Remember, when I was showing you on the form, let me go back to it. On the expenses claim, line 18, the first question it asks is if the vehicle is owned by you.
Oh, okay.
Or it asks if it was assigned to you.
Okay.
So you have to, but once you make the selection, then you indicate.
Okay, no problem with that. I appreciate it.
All right, so we're going to take 2 more persons.
All right.
Tamika Watson. You can go ahead, Tamika.
Yes, good afternoon. I just want to ask, I think someone had asked in the chat if this presentation would be available on YouTube, and the answer was yes.
Yes, it's been recorded.
Okay, so how will we be able to find it?
Go to the YouTube platform and type TAJ webinar.
Got you.
Or go to the website.
Got you. Thanks.
Okay. You're welcome. One more question, and this final person will be Richard Samuels. Go ahead, Mr. Samuels.
Yes, good afternoon. Are you hearing me?
Yes, I'm hearing you. Go ahead.
Hello? Okay, all right, thanks. So I got on a little bit late, or I got on a lot late. So I don't know if you had addressed this already, but I didn't declare for the year before last year, which would be 2022. And
yes.
So, well, I think I tried to do it, but when I went to the tax office, the lady told me that she didn't have a list of my other expenses and it would change the figure. Yes. I had submitted the other expenses, but I didn't see anything happen. But when I went on back to the system now, to try and do it, by the way, I don't know what I'm doing. I just go on and try play around and see what's happening. Right?
All right. So it's a good thing that we
recorded. I'm hoping that
we recorded the steps, so you can go back and look through it. And the taxpayer education numbers are also
so what
listed
did help me was the video that you guys had. So I was watching the video, but it lost me at some point in it while I was watching it. But hopefully this one, when I go back on and see. But the question is, I also started a business last year. We didn't make any profit, but we did make sale. And we did have staff, did have a place that we rent. So we did have expense. Our expenses were greater than the amount of money that we made in the first year. Is that what you mean when you constitute a nil? Or do I have to include those things in what I'm doing? I am a financial advisor. I earn commission. So what do I do?
Was the business registered as a sole proprietor?
Go ahead. No, not a sole. It's a limited liability company.
All right, then it's 2 total different declarations that are being made. But you have to populate your sales and your expenses on the IT02 for the limited liability company, and you would still have to do your declaration on the S04 for the income earned as a financial advisor. So it's 2 separate forms. So it's not a nil declaration because you're going to be populating it with the income and the expenses from the business.
Where I find that?
The IT02?
Yeah, so yeah, where do I go?
All right,
to
I'm going
find
to,
what I'm
so is the limited liability company registered for e-services?
what do you mean?
All right, Mr. Summers, Mike, I'm going to
Yeah.
look in the listing for the taxpayer education numbers, because you seems like you need some personalized assistance. So we'll
I've
get
been
you on
trying to see that.
to a taxpayer education officer. Which office is closest to you, to your location?
We are on Roosevelt Avenue, so I guess Crossroad would be close, or
No, go to the Constant Spring Revenue Service Center.
okay,
All right.
okay.
And they'll be able to walk
What
you
time
through
are
the
their
process.
operation?
We're open between 8:30 to 4 o'clock Monday to Wednesday, and 8:30 to 3 on Thursday and Friday.
8:30 to 3 on Thursday. So that's where you are located?
That's where I'm located.
All right, when I come, who do I ask for?
You simply ask
I'll
for the
come tomorrow.
taxpayer education unit.
All right. All right, so I'll come tomorrow and then I'll ask what I have to ask and thing then.
Okay. All right, sir. And we'll be more than willing to assist.
Come on, put some thumbs up in the chat if you think that our presenter did an awesome job. I think they did exceptionally well. And so we want to thank you. We want to thank you, participants, support team, for making this webinar a reality. We hope you are now fully prepared to file and submit your SO4 on or before March 15. Remember, if you have queries, contact our customer care center and our representatives at 88 Tax Help, or call our taxpayer education officers. Thank you for your participation, and remember, TAJ is working together to serve you even better. Have a good day. Thank you again, participants. Thank you so much for making this webinar a reality. We hope you are fully prepared to file your SO4 on time. Have a great day.